Welcome to Charts Today. My name's David Linton, and today's edition for Wednesday, the 21st of December, comes to you from Aqaba in Jordan, and a lovely sunny day here. So, firstly, we look at the currencies. Then we'll take a look at stock markets and commodities, and last of all, a few tech stocks. So, first of all, the dollar index is at the moment just teetering, trying to break this 103.50 level, 103.60, and so at the moment we are just in a little bit of a sideways move over the last several days. We do have this upside target still here, 105. That's 2.2% upside. The chart looks amazing from a long-term perspective for the dollar. So dollar strength is very much the story that we keep talking about. If we look at the euro, that of course is negative for the euro, and euro is really falling quite dramatically on these charts. The interesting thing is yesterday we did actually break and activate this downside target of 60 cents. So that happened yesterday. So even though this is a very long-term chart, this 60 cents, if it does happen, will take some time to unfold. We do have other targets, of course, a new recent one at 99, 88, and 75. So we have targets of 14%, 27%, and 42% downside for the currency. Now, we may not achieve that last one at 60 cents, but it does look like there is significant downside on the US dollar, euro. And if we look at the medium-term chart, we see this new downside target to 92 on the medium-term chart activated as well. And again, we have, more importantly, we've just broken these key support levels where we've actually just broken through the chart, and that again happened yesterday. So this is a very significant move that we've actually activated that downside target. So really key that we're holding that. We've had a little bit of recovery this morning, but that's really not changed this picture at all. The picture is pretty bearish for the euro. So we might get a little bit of respite in the short term if we cross this cloud, but it looks like 2017 will be a very bad year for the euro. Looking at dollar yen, just a little bit of a pause here as well. So at the moment we're just heading into the Christmas period, and a lot of these markets now just flattening, so that's quite significant. And we look at sterling against the dollar, much the same picture here as well, just teetering along the bottom here. Still bearish though, and finding resistance on this cloud here, so that's significant. And we do have this sort of 125 level that's now becoming quite psychologically important for sterling, but at the moment we've got these downside targets and 117.90, so we do see sterling effectively going below the 120 mark, which will be a psychologically important thing as well. Looking at against the euro, and resolving that difference, which will be the stronger. Well, at the moment, sterling is falling a little bit against the euro, but interestingly, it has come through on the cloud here, so it looks like weaker euro against sterling as well. If we look at sterling against the Swiss, just as a final check, we do see here that we are in this bearish range again, so that is falling away too. So stronger Swiss. Starting with stock markets, we start with the S&P 500, probably the most important stock market index. And again, just holding this 2270 level. Last night it was up a little bit. We're entering the quiet period for markets, of course, as we go into Christmas. If we break this high that we saw last week, then we activate this upside target of 8%. But the US stock market still continues to look pretty bullish, and Nasdaq had a fairly small rise of just 0.4% last night. But again, that is enough to keep us on that breakout and looking good. So, and upside targets here of 4%. So Nasdaq looks almost certain to break the 5,000 mark before the year end. And the Russell 2000 was up strongly, nearly 1% up last night. So the broad-based US stock market, this is 2,000 stocks, is still looking pretty strong. This is the Trump rally, as it's so called. Of course, the big story at the moment that you'll hear all over the news is the Dow Jones breaking the 20,000 level. We haven't quite done it yet. Will we do it by the year end? Well, in terms of what it needs to do, it only needs another 26 points to do it. And really, that's a very small rise on the Dow Jones when you've got an index value of nearly 20,000. So it almost looks likely that we're going to break this this year. And we might see a little bit of resistance there at that psychological level. But the fact is, the Dow is just looking incredible. If we look at UK FTSE, the FTSE closed up about 0.4% yesterday as well, and that's again really quite significant. We don't have any clear short-term targets. We do have this one at 71, 79, which was given back in November, but we're lacking a sort of cluster of targets, if you like. But this medium-term chart, we are seeing quite a lot of targets. If we make a high that's higher than what we saw in September, then we get 7,800. So it does look like FTSE will have a good year next year. The FTSE mid 250 wasn't as strong yesterday. We're seeing a lot of strength in the blue chips. A lot of this driven by the oil stocks with a higher oil price, but interestingly, the 250 is still looking pretty good, and we've got some pretty good upside targets here, about 7%. Not those stellar targets of sort of 20 and 30% that we're seeing in US markets, but it does look like there's good upside all the same. Looking at the DAX had this breakout that we talked of a couple of weeks ago, really significant. We see the break there and then the run. It's like a coiled spring just wanting to run. And we do have upside here of 3% and 1.7% targets on the short term, and 7% and 1.5% here, and then 21, 22% on the long-term chart. So we are seeing significant potential for the DAX. Maybe the weaker euro is helping there, but I suspect a dramatic collapse in the euro may have a big impact as well. Of course, European companies with export dollar income are going to benefit quite significantly in their reported euro earnings. If we look at the Nikkei, it's just been an amazing performer the last several weeks, just continuing to rise, really holding now this long-term trend change through the Ichimoku cloud very clearly, and 5% upside. So Nikkei is still looking good. China had a bit of a turnaround last night, up 1%. It has been the weakest looking market of most of the major markets. Looks like we might have just bounced on some support here on the short term. We still do have these downside targets hanging over us, and we may come back and test this support or even break it. But we are bearish here at the moment. Also finding cloud support here on the price, so that's quite interesting. But also still bearish long term. So we need to be aware of that. And Hang Seng went up also in sympathy, but again, it has had some pretty dramatic falls lately and is bearish on all three charts with downside targets. So China is probably the most worrying looking market globally at the moment, and of course that could have a big impact if we see a collapse in Chinese stocks. Taking a look at the Indian market, we see here that we are still a little bit bearish there as well. And if we just take a look at the Australian stock market, looking pretty bullish. Good upside targets here, 4-6% upside running into the new year very strongly. Very nice cross here on the weekly chart. Bullish, bullish, bullish on all three time frames, the long term, the medium term, and the short term. Taking a look at commodities now, we look at Brent crude first. Brent is looking pretty strong now. Bullish on all three cloud time horizons. We've got a 40% upside here on the medium term chart, 30% upside here on the long-term chart, and a long-term transition. So heading into the new year, looks like Brent crude will be very, very strong. Taking a look at US nat gas, recovered a little bit last night, but the reality is we are just still bearish on this short-term chart until we break through. So we need to keep an eye on that as well. Taking a look at copper, gold first of all. Gold is still just struggling. It's up very slightly at the moment. Looks like it's trying to make a transition through the cloud, but no meaningful upside target. So no signs of a reversal yet. Waiting for that New Year rally to kick in. Hopefully we will see that on gold. but at the moment it's still a difficult one to call the upside on because we don't have any clear targets. Silver is much the same picture, wandering through on the price, but quite a bit more work to do on the lagging line. We do have an upside target here if we can move to new highs and activate that. That's about 6% upside, but at the moment precious metals still looking pretty poor. If we look at copper, copper has been a star performer in the last quarter, but really just now flattening, and it does look a little bit risky that we've got a top here because we've come up on the daily, we've struggled to then get higher than that, and we see that showing through on the weekly chart as well, although we are above the cloud, but the pullback in copper still does look quite likely. Looking at the 10-year treasury yield for US bonds, just flattening a little bit at the moment, but it is looking very, very strong indeed. Still got this upside target of 4.44%. Very hard to imagine yield rates at that, but that's what the target says. Taking a look at tech stocks, most tech was up reasonably well last night. Apple up just 0.3%. We see here quite a mixed picture with targets here, but mostly upside targets. Short-term targets now of 6% upside. Taking a look at Amazon, Amazon performed well, up 0.2% overnight, and we see again that we've at the close we've come above the cloud and holding that, so looking quite good. Facebook's still just struggling to break this 120 level, so for a lot of US tech it is quite a mixed picture, but we are bullish above the short-term cloud. We have some new downside targets creeping in, and we're just struggling to come off this bottom. If we break below this 115 level on Facebook, that is a little bit worrying. That's it for today. Until tomorrow, happy charting. See you then.